We are back with you, coming down the home stretch of our trading day here on a Wednesday. I'm Marlon Bowling with you. We're watching your grain trade. And let's go right to the grain futures and see what they're up to. We had firmness in the corn and soybean markets here most of the day, and let's go take a look here. Right now on the corn market, we're still higher by about 2.5 cents, so they're hanging on to gains. December now at 3.56 1/4, and we have March 2.5 higher at 3.66. What about the soybean trade? Well, here on the soybeans, we'll start with November. It is currently trading at 9.78 3/4. We're up 6 1/4 cents on the day. The January up 6 3/4 at 9.88. And in the wheat markets, we've had a little bit of a divergent trade. Chicago at times has gone lower, while the other two exchanges have been a little firmer. December Chicago wheat right now up 3/4 at 4.20 3/4. In Kansas City, December, we have it trading 2 higher at 4.23 3/4 per bushel. And in the Minneapolis spring wheat trade, we have December there 4.5 higher at 5.32 1/4. A quick look at our cotton market right now to get you up to speed on December. We're currently trading 20 points lower at 70.95 cents per pound. Now let's go to the trading floor in Chicago. Right there at the CME Group, we have none other than Todd Bubba Horwitz of BubbaTrading.com. There he is, and he's rip-roaring and ready to go. All right, Todd, let's go take a look at the markets here. Positive day in the grain trade. This kind of fits into the mold you've been talking about, I believe.
Yeah, I think the action is very good, Marlon. I think when you look at the picture, we're going to see a little bit of resistance in corn right there around 355 to 360. Don't be surprised if we pull back to 350, but that is actually very solid action. What we're looking for here is for it to, again, build a higher base, right? We came down, we made those lows, and we've been stair-stepping up, which is much better action for a longer-term move. So I think we'll build the base here, be a higher, lower, it won't matter. Yesterday you saw they were up all day and then got hit at the close. I wouldn't be surprised if that happened again today, but as long as we can maintain these levels, I think we continue to work our way up and probably look for like 365 to 380 would be our next target from here. And then soybeans, my concern with soybeans is obviously we have an expiration on Friday, but we've got to penetrate and stay above 980 for November, but then actually we're going into January, so we want to see closer to 10 because I don't want to see them start to make higher lows. And wheat, as I told you this morning, I think wheat is actually acting terrific. Was down, and as soon as we talked, it went down to 415 but back up to 425. So I think that's good action. That's consolidating. Buyers and sellers getting mixed up. I think overall the buyers will take over, and I think we'll see all these markets start to work their way higher. As long as they don't get too crazy, I think we'll be in real good shape here.
Now I noticed where first notice day on November soybeans is coming up at the end of this month, I believe. And is there much that you expect to happen because of that as we get deeper into the month here?
Not right here. Unfortunately, we've been in such a desperate market. We've been in so much trouble here that I think I don't expect much here. Now, that could change. We can go day to day. As I mentioned earlier, I think a lot of the sellers are kind of just saying, you know what, I can afford to store this. I'm going to put it away. I'm not putting it on the market. And I think some of the buyers, although prices are still kind of low, are having trouble getting what they need to fill their orders. So I think you could see a silo squeeze there coming towards the end.
I know you love to watch the value of the U.S. dollar, and it's been a little bit weaker today. Has that been helpful here to the grains, or do you think it matters?
Yeah. I think the grains have already priced in even a stronger dollar, and actually just recently the dollar has actually turned around here and is now working its way higher. I think my personal opinion is the grain markets have already priced in almost $1. In other words, they think it's going, like I do, they think it's going to the buck, and I think that'll be the end of it, because we know that if the Fed is going to raise rates, it's going to propel the dollar, and I think the grain traders and farmers and producers have already kind of priced that into their model. So they've assumed that if the dollar breaks, that would be a big boom. But I think until the Fed rate talk stops, we're going to continue to see that dollar try to march towards $1.
Okay, all right, we'll hold you to that, and we'll check that in the coming days. Now we'll pause for a break. Todd, I want to visit with you about this cattle market. It is falling on hard times today. We'll talk about the lean hogs as well when we come back right after this. Well, we're back with you on the Market Day Report, and it's a Wednesday. We're going to the trading floor in Chicago. We have Todd Bubba Horwitz standing by. He's with a website, by the way, a fantastic website called BubbaTrading.com. It's a wealth of information related to the markets, also very educational. Todd, looking at the livestock trade here, we have had the cattle market really taking kind of a beating in the early going today, and then we had a lower wholesale beef trade today as well. Right now, December live cattle currently down $2.10, Todd, at 97.12. That's only one tick off our low of the day. And February down 2.17 and 98.45, and that's on the low of the day. What do you make of that?
I make it that we're going to come to a certain level, which is the low, just above 96, where we're going to have to hold or we're going to go lower. If we make another new low, we're going lower. I believe that we're actually seeing some reasonable bottoming action here. I mean, I'm not stepping in here to be a new buyer. I'm looking for a spot to buy, but I want to see this. We have to hold above the contract lows for another few days to show me that we have the opportunity to hold. One of the problems that's going on is that we had a lot of that liquidation going on, and a lot of it was forced, which created some of the markets, and a lot of the buyers are stepping away, which makes the market wider, and you're seeing it in the cash as well as in the futures. I think overall, if we can hold 96 in the fat cattle, I think we'll be fine, and I think that would be a spot that I would look to buy. But I'm not ready to jump in here because I want to see if we can hold this. We need to hold for like a week or so, which is another couple of days from here. If that happens, then the action will be fine, and I think we'll look to be a buyer. I think the risk is still by being short here. I'd much rather be long, but right now I'd much rather be on the sidelines watching it and looking for a spot to get in and buy.
All right, and I know you've said for several days that you would prefer not to see a big spike up out of here. Well, you got your wish, I guess.
Yeah, well, unfortunately, I didn't want to see the spike to the downside either. And when you see these big, gigantic limit-up days in a market that's going down, all that usually means is that they caught the shorts and they're going to take them lower again. It's a method of trying to bring in new money that gets panicked, and then what they do is they bring them lower. You want to see a much steadier move, and buyers and sellers on both sides of the market, then it'll break to the upside. I think that's a much better shot for us. Okay, let's look at the feeder cattle trade with live cattle going over $2 lower. Let's look at the feeder futures, and wow, November down 314 now at 114.88 per hundredweight. January down 286 at 110.92 per hundredweight, so they're following suit. I want to visit with you for a moment about this lean hog trade. It's been trying to stay on the plus side today. Boy, it's just hanging on by, well, if they had fingernails, they'd be hanging on by their fingernails. December lean hogs up 16 at 41.28. February down 15 at 48.30. It's just barely treading water here, and this lean hog market, it seems like it's a battle royale to see if it can maintain that $40 benchmark. You're 100% right, and that's the key numbers. 40 to 41. If they can't hold there, then they're probably going to go lower. But again, we have to we weigh the measure and the risk reward. If you're an owner, you have them hedged, you shouldn't have so much to worry about. If you're a speculator or a trader, you got to watch this level. I mean, we can get a nice move off of here, but we know December is traditionally not the greatest anyways. But what I want to see is we hold 40 to 41. If we can do that, then again, I'd be a buyer here. I'm pretty confident and pretty positive the whole space. I'm not stepping into too many things here because, again, we're in a lot of strange areas that anything can happen. But if we can get the right action from here, I think we're going to be in very good shape going forward. Kind of like what you looked in the grains when they were going down every day. They got to build a platform or a base, and then we can start to see some upward momentum.
Todd, as always, wealth of information. Thank you so much. Appreciate it very much. And if you don't mind, I'll bring you back. We'll talk a little bit on the Rural Evening News tonight as well, okay?
It's the Marlin and Bubba trifecta. I'll be back.
All right, we'll go for that. All right, thanks, Todd. Todd Horwitz with BubbaTrading.com. And